Another day, another record profit for one of the big four banks, with ANZ posting a $5.3 billion profit today. Together, the four banks have now posted a cash profit of $24 billion for the full year. And they've managed this despite economic turmoil and slow credit growth. Emily Stewart reports.
ANZ certainly does live in this world, and with instability in European and US markets, the bank's institutional division took a hit in the latest financial year.
They were extreme conditions. It's the volatility, daily volatility we saw during that period was even more extreme than that we experienced in 2007 and 2008.
ANZ prudently took the view that they were going to take risk off the table during that quarter, so there was a negligible revenue contribution from what otherwise would be a reasonable contributor to the revenue line.
But in the year to September, the bank still managed to post a record net profit of $5.36 billion, up 19% on the same time last year. And while overall it's a solid result, the bank had a flat second half, with an increase in net profit of only 1% to $2.6 billion. ANZ says economic volatility, cautious consumer behaviour and higher costs of capital all had an impact.
Customers are not borrowing because they don't feel comfortable about where tomorrow is going to be. So not low sentiment, but very high uncertainty.
Chief Executive Mike Smith says the trading environment is now more predictable, but the bank will still scale back its market and trading businesses.
I think we're going to have this sort of volatility for another couple of years. And I think that Europe is going to go from crisis to crisis. It will resolve itself with a few sticking plasters, and bandages. And those will then wear off and things will get exciting again. And something will happen which will create uncertainty.
And this means the banking sector is facing increasing costs. Westpac cut around 800 jobs last financial year and yesterday flagged there'll be more to come.
We're seeing significant numbers of bankers hitting the street over the next 3 to 6 months. So there's a lot of knives being sharpened out there.
But ANZ says its move into Asia is growing the business.
We've got a high income, high cost model, and we will maintain that because we continue to invest in areas that are growing, i.e. the ones Asia Pacific and the institutional business. And if you were to look at our overall staff numbers, they actually increased on the year.
The Asia strategy is quite differentiated amongst the major banks. I suppose a perennial theme, though, with that is that it comes with cost growth to invest in the franchise, and you need to be tolerant of cost to access that medium-term growth. That's perhaps somewhat more difficult in a more difficult revenue environment as we're in at the moment.
The bank declared a final dividend of 76 cents, taking the full-year dividend to $1.40.